So another video about the US property market, which for some has been a disaster and for others extremely lucrative. Let's get into it.
Blackstone is an American financial giant with over $1 trillion in assets under management.
What we do is we buy assets, say we buy a company, and we make them better.
Real estate is one of Blackstone's major divisions.
Blackstone is really in the business of marketing investment products. A byproduct of that is they became a very large landlord.
The company has an ownership interest in at least 274,000 rental housing units.
To be clear, that doesn't mean they own them outright. It's an ownership interest. I think we need to distinguish between the two here before we go further. Let's just make that clear.
That likely makes it one of the largest landlords in the United States.
In every market where we operate, we own less than 1% of the housing available.
She's obviously trying to say that to make it seem like it's not that big of a deal, like we don't really control things, we don't shift markets. It's a way of saying, don't worry about us, let us fly under the radar and acquire as many assets as we want, because ultimately we don't own that much. But be careful, because when things are owned at mass by these institutions, there's less wiggle room for renters. That's all it means. The days of you talking to your landlord directly or being able to negotiate things are going to be long gone. So the idea here is that the computer says no. If you're a tenant and you're renting from a landlord like this, there's absolutely no wiggle room, no negotiation. The price is the price. And these sorts of landlords are destined to just hike prices when they want because they have to meet investor return hurdles. That's it. That's all they care about. Returning value to shareholders. So ultimately, housing is being used as an asset class to do that. Now, I'm not going to sit here and say whether it's right or wrong. It's the game. And they've clocked the game. They've realized God isn't making any more land. So why not try to take advantage of the situation by way of real estate? And that's what we're seeing. They're just a large player in the market. But trust me, this is happening all over the market with smaller private equity firms as well.
Their portfolio of rental housing is concentrated in Sunbelt regions like Texas, Georgia, and Florida. Many of these units are...
Notice in my other video, Texas and Florida were two places where you're seeing a housing crash. So inevitably what's going to happen is the likes of BlackRock are going to step in, Blackstone, are going to step in and sweep up a lot of those properties at a discount and rent them back to market. They won't be looking to flip or sell, maybe in some opportunistic strategies, but I think for the most part, you're going to see these units come to market in rental form, which means you can expect hikes in rental prices for years to come.
Apartments. A smaller portion are single-family homes. The company also has stakes in mobile home parks, student housing, and more.
I have to give them credit because they went after like apartment housing and sort of residential housing as opposed to going into malls or retail side of the business, which has really just struggled.
Yeah, those parts of the market have been shot, kind of commercial property. So it was a good decision. But I think longer term, it may balance out. I don't know. I'm just hypothesizing here. Let me know what you think down in the comments. But what you are seeing with a lot of these commercial units are them finding other uses, turning them into content creation studios, virtual reality experiences, day centers, even nightclubs are offering kind of yoga during the day. So people are trying to maximize revenue per square foot in commercial spaces, but it's definitely been difficult for a lot of landlords. So focusing on residential where people need to live seems to have been a very good investment decision.
Rents keep rising in many parts of the US, particularly major cities that aren't building enough housing. As a result, some cities are considering policies that protect tenants from rent hikes. If these measures pass, they could affect Blackstone's bottom line.
I just think that it's time for the landlords to accept that they can't always make as much as they would like.
It's interesting though, because you have those people in the middle that were once landlords that didn't mind squeezing people at the bottom. But now they're also being squeezed out. It's a problem. Obviously, it's unsustainable if it just keeps going that way and inflation goes that way, but wages remain stagnant or grow at a much slower pace. It's simply unsustainable. But it's just interesting to see you have a lot of people who either were landlords, owned one or two properties, or maybe rented at a discount for an extended period of time and had nothing to say. because they were comfortably in the middle. Now they're getting squeezed out. It's a problem.
So, how did Blackstone become one of the largest landlords in the United States? Most of the rentals Blackstone owns are in massive multifamily buildings. Take, for example, Stuyvesant Town Peter Cooper Village. Blackstone acquired this property in 2015.
Stuytown is a city within a city. It was built in 1947 for returning veterans. There are 11,242 units and approximately 30,000 residents.
Today, all of the apartments in Stuytown are rent stabilized. That's a big benefit for long-term tenants like Susan. She pays significantly less than the market rate of rent in New York City.
I moved into Stuyvesant Town in January of 1980 after having been on the waiting list for a little more than 3 years.
But the rents at Stuytown have climbed over the years.
Just dealing with 1 bedrooms and 1 bathrooms like I have, the rents now start at more than $4,700.
What the hell? What are you paying for? That doesn't make sense. It makes you wonder, though, a lot of these people that had these great deals many moons ago, why didn't they just buy the place? It's like they could have, obviously you can't see into the future, but surely you just could have bought it and you won't be in this predicament. I'm always of the opinion that God isn't making any more land. And typically real estate goes that way. It may go a bit like that, but that way. So if you can, try to buy it. I think that still stands today if you live in a major city. I know it's increasingly difficult, but if you're fortunate enough to, take advantage of it, because you could be on the other side of this in years to come where you're commanding this much in rent. Just think about it that way.
They go up depending on where the apartment is located.
In 2020, the tenants at Stuytown sued their landlord. Their claim, Blackstone's subsidiary planned to convert units to market rates, raising rents beyond what the city allows for stabilized units. The New York State Supreme Court reviewed the case and ruled in favor of the tenants. Blackstone withdrew its protest of the findings, following court orders in 2024. Still, the company sees rent control policies as a risk.
What we see consistently across the globe is that policies that focus on rent restrictions actually have a counterproductive outcome in that they really lead to higher housing costs overall. Restrictive policies really chill the environment as far as encouraging new development and even investment in existing housing.
I don't really understand how that's the case. I'm assuming it just means investors are less willing to rehab, refurbish, and update existing apartments. Maybe that is the case. But what I find super interesting is that if you know a building has rental controls in place, why invest in it in a speculative fashion and then complain about it afterwards when you're not able to raise rents because it's rent controlled? You kind of knew that going into it. So it's very hard to feel sorry for investors on that front. Like, it doesn't make sense. Just invest in something that you can have more control of the outcome in. I think what you see here are some people trying to buy buildings. I think there was a case in Toronto not too long ago as well, where the tenants won effectively because they lived in a rent-controlled building and the landlord was taking the P, for lack of a better term. So when you're investing in a building like that in a speculative fashion, knowing that the building has rent control and you're not able to raise rents, despite the fact you do all these sometimes malicious things to get people out, rehab the property and bring it back to market, when that doesn't work out, you can't really complain and try to blame the overall market or say that it has longer term negative effects on the property or on the market itself. It's just hyperbole. Like, you lost out, take the L, move on.
When Blackstone buys property, it tends to spend a lot of cash improving their asset.
The video intercom system was something that Blackstone installed. They've improved elevators.
We've invested $425 million of capital since we acquired Stuytown. That shows up in lots of different ways. Everything from the quality of the apartments themselves. We have created new bedrooms, and many of them, it's like the equivalent of creating a whole new building.
Obviously, because you wanted to make more money from it. Like the way they're saying it is though they did it in a philanthropic fashion. We did all these great things. Great. Thank you. But ultimately you're doing it because you want to make more money. Like stop going on as though you're doing Mother Teresa's work.
You look at the number of bedrooms we've been able to add.
This can, in some cases, lead to an increase in rent.
I think that Blackstone had a vision for their ownership of the property, which was not always the best in terms of property management. The people that they hired came from the leisure industry or the hotel industry. There are a lot of fun things that Blackstone did. I mean, there are times when you walk out on a summer evening and there are movies going on and people are lying around in the Oval. On the other hand, the Tenants Association gets calls from tenants that are going crazy because they have an unusable sink and they can't get an appointment for a month.
Yeah, so these are the tactics they use to get people to vacate the premises so that they can upgrade them and then potentially raise rents in the future. So again, it's not philanthropic. They're not doing it because they want to improve the environment or the local community. They're doing it so they can earn more money off future tenants. And look, I can't blame them for doing so. They're in the business of buying undervalued assets and maximizing return to shareholders. But I think common folk need to understand that that's the name of the game for them and understand how to play the game. It sounds though like on balance, they're the ones getting finessed here and the tenants aren't going to pay more and aren't going to leave.
Do something about it. Those are the kind of basics that we really like, maybe more than having ice cream available on site.
In response, Blackstone told CNBC that it's reduced Stuytown's average work order time by 65% since 2015.
In any case, this is a super interesting video. I'm going to link the full video down in the description below. I think one way to circumvent this issue is to try to get a place of your own if possible and pay it off as soon as possible so that when you do get to an age where you can work no more, at least you have a place that's yours and you won't be beholden to the likes of BlackRock. In any case, if you enjoyed this video, give it a thumbs up. Let me know what you think down in the comments below. I'll see you in the next one. Peace.